Show, and it's our pleasure to welcome with us again Rob Lees from Mortgage Choice in Blue Mountains and Penrith. How are you, Rob?
I'm good, very good, thank you.
Welcome back to the show.
Thank you.
So we've got a really, I think it's an interesting topic anyway, today that we're talking about the comprehensive credit reporting.
Yeah,
so some
that's
new
right.
changes coming in.
It is a big change. I remember talking about this, and it was a couple of years ago. We flagged this change. In fact, the change has already taken place, but the problem is that none of the banks are really utilising it, whereas from the 1st of July 2018, they have to. But it's going to be very different to the way credit scoring currently works, because credit scoring at the moment works totally on negative data, and it's all about historical data. So it's what's happened in the past. And you'd find this, Peter, you have a client who applies for a loan, and they may have a $50 default on their Telstra bill, and because of that $50 default, they can't get a loan. And it's really frustrating, and that historical data doesn't really reflect a person's ability to service a loan, and yet it's given so much weighting, and it stays on the credit record for 5 years, and it really messes things up for borrowers who may otherwise be in a very good position to service a loan. So that's how it works at the moment, whereas the comprehensive credit reporting system is going to allow for both. It's going to take into account positive data as well as negative data.
Yeah, which is fantastic, isn't it? Because, you could have a number of debts that you've, you probably get asked this question a lot too, and, but I had a personal loan that I paid off ahead of time.
Yes, yeah.
Means nothing.
It means nothing, and often clients say, and they'll give you all those things, I pay all my debts on time and all that sort of thing, and it actually means nothing in the current system, whereas in the new one, that will actually help you get a loan.
That's fantastic.
And it means that if there's negative data there, it can be, it can be mitigated through the positive data, the fact that we are paying our bills on time and servicing our loans and paying out loans and all that sort of thing.
Yeah.
So it's a very good change.
Because it always seemed ridiculous to me that for a phone bill that you may have overlooked because you were on holidays or it got the dog ate it or something else occurred to it, and then
once.
And that's it.
Yeah.
And then
right.
and all of this, you might have another in managing another $1 million in terms of assets and everything.
Yeah. Absolutely.
Sorry, you've got a phone bill that you didn't pay.
I still remember one many years ago, and it was there was an investment loan, an owner-occupied loan, like a new owner-occupied that they were purchasing, and I think it was about 5 years ago, and it was about $1 million worth of debt, which was a lot then, in a very good position to service it, and it was all held up with a $100 Telstra default.
Yeah.
Yep.
And those companies just don't even think twice, do they, about slapping you with a default?
They just slap on the default, and so this is changing, so it really is good news.
Yeah.
Yeah.
So what are the positive outcomes that we hope to achieve from this change?
I think the positive thing is it's going to, because there's more data involved, it's going to give a better picture of a borrower's ability to service a loan. So that's the first thing. So I think it's going to be fair, and that's my hope, that it's going to be fair, because the current system is very unfair. And the other thing that's been flagged by politicians as well is, and they're going to be pressuring the banks on this, to actually use this to be able to offer home loan customers or borrowers, not just home loan customers, the opportunity for lower interest rates.
Yeah.
So
how good's that?
Yes. So it may very well be that there's a different pricing structure that will come into effect that will allow people with better credit scores.
Based on your, that's what I was going to ask you, based on your credit score?
Yeah.
So that will, do you think the score will actually change?
Yeah, look, I'm not sure exactly the mechanics of how it's going to work, but if what they're saying is when all this comes into effect, because there's more data coming into assessing a person's ability to repay a loan, that then places the bank in a better position to offer bigger discounts to people who have very good credit ratings. So hopefully it's going to end up as a big win for consumers.
So you might actually get a bonus.
We hope so. So we don't know what that's going to look like, whether it's going to be a bigger discount on the standard variable rate. We don't know, but that's what's hoped will be an outcome from this.
And do you think part of this new regime will also be when they first talked about bringing it in, that as an example, so late payments on things that are not necessarily defaulted, but you're consistently late with paying your credit card or paying your home loan and things like that. That's also going to be reflected in this new regime,
it still will be.
it?
The negative data will still be there, but the thing is that can be mitigated against positive data.
Yeah.
And that's the thing. But it still is a problem when you're paying your bills late.
Yeah. Well, I think I don't know about you, but I have a lot of customers that sort of just, I pay it.
Yeah.
Like it's there. Yeah. Or we're fighting one with credit at the moment where their main bank account, because now we're required to give a lot of transaction history to prove our client's ability to repay, and there was one dishonour on it. And the bank are just sending us inside out and back to front over one account.
It's very frustrating. And I've had that too. So it can be just one dishonour and such a big thing's made of it. And it's just...
But hopefully this new system will,
hope so.
Like you say, combat that, because the lenders and the credit assessors are very focused on this negative, aren't they? Instead of looking at
and there's going to be positive that will come into it. So that's going to be very important.
Yeah, because what they're really thinking of is, well, if I give this loan, are they going to pay?
That's right.
And at the moment, they're just looking at the negative instead of the positive.
And that's all they've got to go on. Yeah. So... sometimes I've had clients, normally if it's a one-off, they'll deal with it. But if there's multiple times where there's a dishonour or it goes into credit.
Bills.
And some people just aren't very well organised.
That's life, love.
It is.
So what's some tips, Rob? What's some do's and don'ts for us?
And now's the time to start preparing for this, because when it comes, like now, we want to sort of start working on that. Look, it's pretty obvious. Pay on time.
Yes, Catherine.
Okay.
No.
Catherine, especially if you pay on time. Do you want to get a home loan, Catherine? So it's very important to pay your bills on time.
Yeah.
So look, if you can't remember, set up direct debits. Although the other thing, and I've been hit with this myself, is I had direct debits set up, and with the Amex card, which was linked to the Visa, and now the banks are no longer offering the Amex card. So I
got caught in that too.
They've all been and that's why
if you lose your card,
so you've got to
cancel
reset up your direct debit and all that kind of stuff. But pay it on time.
But I think if you can manage your money, a direct debit to a credit card, if that's all you use that credit card for, and then you just make one monthly payment, it's actually you can do that quite well, can't
that's
you?
How I manage all my bills. Now, it may not work for everybody. It does for me, but. Pay on time. Very, very important. Now, this one's very, very important. When it comes to how you manage your credit card, and this was a tip from Mark Burris in the way that this works, and he's saying maintain an available credit card balance that's always in excess of what you owe.
Oh.
Now, that is very, very important information.
Yeah.
If this is how it's going to be measured. So if you've got a credit card with a limit of $15,000, and you find this, Peter, with clients, you've got some people who are just almost maxing the thing out all the time. Once it goes over the limit, that's a problem. If you're just playing around the edges, that's going to be a problem. But trying to keep it so that you actually
the buffer
have at least half that credit limit available. So don't max it out.
Yeah.
So that's very, very important. And that's going to build a very important repayment history. Again, credit cards, don't carry the balance forward. I don't think anyone should ever do that. If you can help it, pay it on time, pay the full balance. And this is another one that's very important. Keep the credit card that you've serviced for a long time. Keep that one, and pay that one first. So that's the one that's going to give you a higher score for your credit score. That one that you've had for a long period of time.
Oh, that's interesting.
So that one's going to score very, very well. So keep that one for the longest term, because it's going to give you a good repayment history.
Don't be shopping credit card facilities around.
That's going to come into the don'ts.
Yeah.
Okay. Always prioritise your mortgage. That's the biggest loan that you have. So servicing your home loan is the most important repayment to keep making. That's going to build a very long-term positive record of your repayment history. And I think another one, talk to your broker. We're experts in all this. We know how it all works. We see the positive and the negative when it comes to credit assessment. Yeah, well, we probably do know more about this, don't we?
Your lawyer doesn't like paying your bills.
No, don't listen to Catherine.
So we can help with this kind of stuff anyway. On the don'ts, don't use multiple interest-free cards. This is one I've seen clients do, and they keep rolling around their credit card balances. They think they're really clever, because
they're
they
beating
keep
the banks.
changing over to, you've got 9 months, 12 months interest free. And then when that time's up, roll it over to another one that's interest free. Well, under this new system, you're going to get caught out. That's a problem anyway, even in the old system, because eventually it catches up with you and you're living on credit card debt. And it's just a terrible way to live. You're not in front, and you're going to be penalised for it under this system, because you're only going to have those credit facilities for a very short time. Don't make late payments. Don't have late payments. Make sure that everything's paid on time. And very important, don't go over 60 days. Once you go to 60 days in default, so if you're not paying your bills, you can survive a month. I'm not recommending that, but if you go for 2 months without paying, it is defaulted.
Yeah.
So a default is far more serious than a late payment.
Yep.
So that's when it gets listed on your credit record, and it'll still take 5 years to come off it. So very, very important. Very important.
Yeah.
Okay.
Good
You can
advice.
actually list on a credit report, because I hopefully, if only my clients would pay within 60 days sometimes, would be wonderful.
Well, you could. This is the thing, that if your clients don't pay within 60 days, you could have them. You could have that listed as a default on their credit record. Lawyers do this sort of stuff, don't they? Don't they send letters to people and say, well, non-lawyers say, I will bring in my lawyer if you don't pay this bill.
It's much better when I'm doing it on behalf of somebody else.
Yeah, that's right. Get someone else to write it for you.
I'll employ my other lawyer mate to do mine.
Yeah, but
I know a good lawyer. I can help refer you.
It's true that
I can do it.
It can legally be defaulted if listed as a default. That has huge consequences if you don't pay your bill within 60 days.
And that's another huge topic for conversation, is around cash flow, isn't it, when you're in business? Those things, because you just have to. It is what it is.
Yeah.
Well, yes, and except for two of mine that then declared liquidation and bankruptcy.
Oh,
Yep.
Yeah, I had that happen once.
Yeah.
Well, Rob, I look forward to watching this unfold. So we've got, 8 months before it actually comes into play.
And just start getting the good habits in place now.
Yeah, start getting prepared.
Yep.
Because otherwise...
I love how they're both looking at me. If this was only live.
No, I was looking at you, Peter. Then, but she was looking at you.
You threw yourself under the bus, love. We didn't have to.
Yeah, that's right.
Thank you so much, Rob. If anyone wanted to have a chat to you about their mortgage or getting their finances into order, for that, where's the best place to find you?
Give me a call at the Blaxland office, 4739 9749.
Perfect. Thank you.